Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Tuesday, 28th November. Hope everybody had a great holiday, had some time to rest, reflect, spend good time with family and so forth. We are back. Unfortunately, looks like the stock market, the averages are on holiday still, right? Man. 5, 6, what is it like? I just actually went through this with my members. We're going on what, 2 weeks of this just lackluster, narrow trading range, which also, we had the discussion why it's so important that if you're actually going to be serious about doing this, to have all various, options as an alternative to what's going on here. And in fact, a lot of the action's been going on. In fact, we just looked at other markets and not be so one-dimensional. So this stresses that point that just trying to trade one asset or just trying to trade the S&P futures, there are periods where it becomes very, very challenging. And that's what it is right now. So, you've got stocks like Pendua today. You've got last week was Burlington. This week we've got Dollar Tree coming up, which we're involved with. We've got, a lot of stocks still moving. It's one big mover a week, really. I've been pointing that out. So if you still are, if you want to learn, I'm going to have a class coming up next Thursday about the various types of contracts, because a lot of the challenges too, we have a lot of rollover today. So I want to discuss rollover. Let's actually get into the charts here. Again, give me a thumbs up, subscribe to the channel, and all that. Put some commentary. If you want to reach me at support@transparenttradesolutions, or you can private message me on X as well. Let's go ahead and get into the charts real quick here. So the notables today really come down to gold. I've been talking, we had rollover in gold, and I think everybody's starting to talk about gold now. It is looks to me like 2100 is in the cards. One thing that we did talk about with members today is if you miss the move in gold, one way to participate, if in fact we are going to break above 2100 in gold, is to go into the miners. I'm specifically looking at Newmont. I don't know if you saw that today. Newmont mining is one way. It's got a lot of runway to the upside still. It had this nice pop. It's still got to get above 41, but it's got a lot of runway. And there is some obviously there's corollary to gold, but if you think about it, if there was a 100% correlation to gold, this thing peaked at 86, it's sitting at 40. So there's a lot of upside catch up to do with Newmont as well. So this usually happens at the, these miners always run up as the commodity, runs. So watch this, but I think if the commodity keeps running, watch this as a catch-up trade. So this is something we're looking at today. So just the notables there. The dollar also has obviously something to do with it. The dollar breaking down finally 103. This is part of it. Gold. If I still, as I mentioned, I still think gold is. I'm sorry, the dollar is probably headed down to below 100. That does portend well for gold moving above 2100. So that's something to be focused on. If you want some help on that, you can contact me and I can help you with what we're doing at TTS in that regard. Also, silver similarly just rolled over as well. You can see that that's also ready for a break. Not as potent as gold, clearly. I mean, gold is on the brink of making an all-time high here at 2100, where silver has 30. We're only at 25. So is there a catch-up trade in silver? That's going to be interesting to see what happens there. Oil just chopping around here. We got OPEC and the inventories tomorrow. This looks to me like it's trying to bottom out here. You can see it made a low right down at the 72 and kind of just chopping around. I think 80, any break above 80 or below 72 are really the key levels, really bottom line with oil. With regards to the S&P, you can see how narrow it's been, how lackluster the trading has been. This basically portends a move coming up here. We've been literally sideways here, sideways here. You can make the case for 2 weeks now we've been going sideways. This usually resolves in a breakout move. Now, technicians would tell you that the breakout move is going to be to the upside. That's not always necessarily the case. You know, up here, we spent all this time going sideways, and we actually, and you can make the, you know, everybody looks at this and says, well, you know, the next leg is going to be higher. That's not always true. In fact, you know, we basically have to break 4,500 really. If any material drop is going to happen, you know, we'll have to break 4,500. And we also remember the S&P still has the all-time high is not even close. We're all the way out to 4,650. That's the all-time high. So we're still about 100 points away from these all-time highs in the S&P here. So if you look at the chart here, the all-time high was actually 48,800. So we're still a few hundred points away from there, as the NASDAQ has been the most obviously the leadership, and that's actually not that far away from an all-time high. So is the Dow, because of the big cap, mega cap tech stocks in the Dow is also very close to an all-time high. On the other hand, you know, Russell is languishing and maybe plays catch up. You know, we'll see. This has basically done nothing as well. We got clear resistance up here and so forth. So that pretty much is. Also, again, you know, rates did fall off again. We are coming into some levels in the 10-year. And the 30-year has not broken out yet. TLT in particular, which is one I've been focused on, is on the cusp of breaking 91, which is a level I've been looking at. You can see we're right on the cusp of breaking 91.5, which is where we broke down from, right there, 91.5. So whether this is a true breakout or just you know, going to be important. Now, also keep in mind that, you know, rates going down, bonds going up have been a good thing for stocks, but there will come a point where the bond rally is actually more indicative of a much slower economy, more trouble. Remember, because traditionally bonds have been a safe haven. They've lost that kind of mantle, if you will, in the last 12, 18 months because of what's happening with the Fed. But I believe that we have a massive bond rally. That's actually not going to be good for stocks, because a massive bond rally basically is indicating that the economy is really slowing down. And so it's going to be interesting to see how the bond market reacts in the next, you know, by the end of the year and so forth. Okay. Other than that, again, I have a class coming up. It's going to be about using contract specific versus contract adjusted charts. I know that's always a quandary for folks, especially like, you know, you look at nat gas and you go all these gaps all over the place. And it is confusing, especially, you know, we've had rollover this week. In fact, the last couple of days we had rollover in the metals, in the interest rate market, in nat gas, and that does create some confusion. So I will try to clear that up for everybody. Again, I'm going to start posting the links to that class probably on Thursday. It's going to be a week from Thursday. Okay, so get ready for that. And if not, have a great rest of your week. I'll see you back on Friday. Take care. And again, if you want to sign up for the newsletter, get in touch with me. Support at all the links are below. We'll see you on Friday.